So in order to link the present and the future, you have to go for briefly, momentarily to the past and understand that Greece, relative to other countries, had a really difficult decade across the whole socioeconomic spectrum. When everyone, let's say, had the fruits of quantitative easing and very low rates, Greece was, let's say, the odd one out from that environment. And as we started exiting this environment idiosyncratically, then the macro landscape changed dramatically from 2022 onwards. It is important to highlight this because it's not an exaggeration to say, especially in Europe, there is a whole generation of professionals that don't really know what it means for rates to rise sharply, nor they know what monetary tightening actually is. And this is important because for us and for the Greek banks, it's our responsibility in this environment, in terms of our commercial policies, in terms of our lending, in terms of our growth, to make sure that we reflect from the one side the positive fundamental and supportive trajectory that Greece is currently exhibiting, but on the other hand, let's not forget the macro environment around us and having a prudent and transparent approach towards commercial policies. In that environment, indeed, Greek banks had a great, let's say, 2023 Alpha Bank as well. It was a milestone. Capital restoration organically was extraordinary. Speaking about Alpha Bank, we had almost 250 basis points of common equity tier 1 increase. Yes, the macro environment helped in terms of the higher interest rates and the structure of the balance sheet that the Greek banks had, with a very deleveraging balance sheet from one side, having spent all these years cleaning up the non-performing loans.
Yeah, and if I may say so, with the help of a lot of public money, which guaranteed the Hercules scheme, so you could get rid of the non-performing exposure.
Correct,
right?
Correct. But at the same time, in Alpha Bank, we've also seen efforts to reduce costs. We have 15 percentage points reduction in costs, and also increase asset management balances and generation of fees, which is something that is going to carry with us for the next few years.
Yeah.
Especially in this environment, though, what was important is to remain balance sheet resilience, because that's key in future sustainable growth and profitability, no matter what the macro environment is. So, yes, it was a great 2023 for everyone, but it is important to go into the next 3 years of our business plan with good and strong liquidity capital ratios to support the Greek economy, our clients, and hence our profitability. Now I'm going to put a few more dimensions into what is important to us with regards to sustained profitability over the next few years, and that is for us being extrovert. It's at the core of our purpose and values in Alpha Bank. The deal with UniCredit was one example on that front. With that deal, our clients in the retail space have the opportunity to have the product factory of UniCredit in mutual funds. Our clients in corporate sector can have the banking channel network of UniCredit abroad, and also the clients of UniCredit can have the Alpha Bank's know-how in order to invest in their project in Greece. And I will conclude saying that another dimension of that, which is at the top in the agenda of our CEO from 2019, is bringing talent back from abroad and blend it with existing vast depth of skill set that we have in Alpha Bank. It's an effort from 2019. We have this community called Ithacans, which I'm part of. I'm a living example of that. And we feel that our vision for a modern, agile, human-centric European bank comes with the blending of the talent that left our country and mixing it with the depth of knowledge and skill set we have in our organization. Let me start saying that the profitability of the high interest rate cycle and the low deposit pricing is something that we saw across Europe. Yes, Greece and southern European countries had probably the lower deposit beta or pass-through, as we say. But overall, if you look at the blended deposit cost for Greece versus the Eurozone, it's just 50 basis points difference. Now, why Greece and other European southern countries had much lower pass-through predominantly is a byproduct of the composition of the deposit base, which is the retail client base, which has much lower inertia to the sensitivity of interest rates, whether they go up or down. On top of that, as we've all spoken here about the deleveraging that Greece has been going through over the last decade, having a very low loan-to-deposit ratio, like 40 percentage points below the European average, and also having an average deposit balance amount close to 4,000, 5,000 euros per account, are also important factors for that profitability. And yes, I would say that Greek banks offer to their customers, similar to the European counterparts, high deposit products and also alternative investments.
Now they do.
No,
Right.
we've started from February 2023, but as I said, an account with 4,000, 5,000 euros as a balance is predominantly used for liquidity cash flow management rather than savings or investments. Saying that, it is important to highlight that the Greek banks work with the Greek government to find the right mix of measures that would alleviate interest rate rises to the consumer and to the households. We were one of the first countries to bring a cap on the Euribor for mortgage holders. Predominantly, the mortgage market is floating rate in Greece for 1 year. Other countries followed, like Portugal in September 2023, and we extended that measure for 1 more year. So there has been good cooperation to find the right cohort of the society and the right measure for it. Now, moving forward, 4% is a number, 2.5% is also a number, and we need to understand that it reflects the macro environment. 4%, someone may say it's too high. It may bring, let's say, cost of risk higher. It may also lower down lending demand or credit demand. Yeah. So 2.5% as an interest rate environment is just about perfect for an economy like Greece, which is projected to grow close to 2.5% over the next few years. So even though initially you may see some drop in profitability, I think the environment, I'm quite optimistic for the Greek banking sector. And on top of that, it comes to the point where the volatility from rates settles down. Fee generation, products like mutual funds, strategic partnerships like the ones we've mentioned with UniCredit play an important role to sustainable profitability going forward, as well as the dynamic management of the balance sheet, which have been done, at least in Alpha Bank and from other peers in Greece, over the cycle of the higher interest rates. As I said before, obviously on the DTCs I might have a slightly different view, as it's something that we've seen in other European countries as well. But as I said in the beginning, I think going forward, being extrovert, being transparent, strategic partnerships, broadening the product offering to your clients is key. And that's why we really partner up with someone that we believe had exactly the same vision with us, and it's something that it's going to carry us over the next few years. But also, when we talk about modernization and digitalization and automation, we also need to take into account the characteristics of our country. What works in Germany, France, or the Scandis is not exactly working like for like in Greece. The culture, the human contact is very important for our clients. So a hybrid model between better digitalization, better automation, but still keeping the human touch into it, I think will be key for the profitability of the Greek banks going forward. Yeah.